Now, it may just be that the foreign company which is receiving royalty from someone in India, okay, may have a permanent establishment as well, right? And in such a case, if a permanent establishment exists and the royalties which are being paid by the Indian company to the foreign company are either attributable or effectively connected, this actually depends on the terms of the treaty, to the PE, right? And how would the taxation work? The answer to that lies in paragraph 6 of Article 12 of the India-US Treaty. We look at PE or fixed base in connection with independent personal services and royalties taxation. The provisions of paragraph 1 and 2. 1 gave right to the state of residence, 2 gave right to the state of source under certain conditions, shall not apply, which means you need not follow the taxation rules given in those 2 paragraphs if the beneficial owner of the royalty or fee for included services. This person that we are talking about here should be the beneficial owner of royalty or FIS. If he is just receiving it on behalf of someone else, let's say there's another company X, right? And X has a PE in India, right? Then what is going to be relevant is this and not FCO, right? Being a resident of the contracting state, resident as per Article 4 of a contracting state of US, carries on business. The continuity of business has to be there. This term has been discussed in detail in taxation of PE, but what this implies is that there has to be a continuity of business in the other contracting state, which is India, in which the royalty or FIS arises. Now, this is another condition, that the royalty or FIS should arise in India, and this resident of US carries on business in India through a permanent establishment situated therein. Situated therein as in situated in India. If he has a PE in some other state, right, and he's carrying on a business through that PE outside India, that's not relevant. The PE has to be situated in India or performs in that other state independent personal services from a fixed base situated therein. This is in connection with the article relating to IPS, right? So if IPS are being rendered from a fixed base in India, and the royalty, and this is an additional condition, and the royalties or fee for included services are attributable to such PE or fixed base. Attributable would typically mean that the activities which are carried out by the PE are resulting in the accrual of royalty, right? In such a case, the provision of Article 7, business profit, or Article 15, independent personal services, as the case may be, shall apply. So basically, if you want to see this in terms of pictures, what it means is that there is a foreign company, right? They have a PE which is providing some onshore services. Onshore services as mean the services in India. The Indian company which is receiving these services is making a payment of royalty or FIS to the foreign company. In such a case, it can be said that the royalties or FTS or FIS are effectively connected to the PE. However, in the second example, F1 has a PE in India, right? But the services are provided offshore. The PE has no role to play in this. The royalty and FIS is still paid by the ICO, but in this case, it cannot be said that the royalty or FTS are effectively connected to the PE because the PE has no role to play in such delivery of services. Let's look at one case law, right? In a turnkey contract provided by F1, or actually provided by ICO to the F1, F1 is providing some services under the turnkey contract. F1 has a PE in India which is providing onshore services, and F1 is also providing offshore services as well. So F1 entered into a contract with ICO to supply certain equipment, provide drawings and designs, which is carried out offshore here, and certain onshore installation services. Installation services carried on by the PE. It had a branch office in India which constituted a PE of F1 in India and provided onshore services and coordinated with F1 to assist in drawing and design made offshore that were controlled by the Indian PE. So it's the Indian PE in this example which is controlling these activities. It is coordinating and telling them what needs to be done and how it needs to be done. Connected to the PE in India? The answer is yes. So some of the key questions which one needs to understand to apply this article properly are, first thing is find out whether a PE or a fixed base exists in India. And if it exists, is the business carried on through this PE? For this, you need to go back to Article 5 plus Article 7 and Article 14. Second is, are the royalties effectively connected or as used in the India-US treaty attributable to the PE or fixed base? Right? These two terms have been discussed in several judicial proceedings, and it will be good to refer to some commentaries to understand how these are applicable in your case. But at a very high level, it basically means that the PE has a role to play in such activities. If so, does the recipient has the beneficial ownership of royalty? So the recipient has a PE, the recipient receives the royalty which is effectively connected to the PE, but is he the beneficial owner or not? If yes, you need to further see if he is a resident of the foreign country as per Article 4, and if all the answers are yes, then it can be said that the royalty is effectively connected or attributable to the PE. So what are the criteria that needs to be seen whether royalties are effectively connected or not? The first one is whether the asset for which the royalty is paid is of the PE or the head office, right? One reference you can make is to the books of accounts of the PE, right? Is the PE accounting for the asset in its own books of accounts? In computing the income of the PE, are you claiming a deduction for depreciation on such asset? Right? Or are you paying a lease rental for the asset? What is the business of the PE? Is it to provide services? Is it to provide licensing services? Or is it just to provide marketing? Right? And do the royalty arise from such business? So the linkages or the arising of the royalty income and the business of the PE should exist. Does continuance of business is required by the PE for effective connection? Now what this means is, suppose someone has a PE until 30th of June 2015, right? A royalty is paid on 30th September 2015. The payment is happening at a later date, but it is effectively connected to the PE because as long as the PE was there, it carried out the work for this. In such a case, even this royalty, even if it is paid after the PE ceases to exist, will be considered as effectively connected.